Hello traders, Gary Wagner here. It is Monday, the 20th day of February 2012, approximately 12 noon in Honolulu, 5 o'clock in New York City. And this is the daily report for gold and silver. This will be a shortened video as the markets are closed in the U.S., but we do currently have both gold and silver trading higher on the day. When I say day, what I'm referring to is the fact that when it traded overseas yesterday, that would be my yesterday, Monday morning in Australia, it did close up. We closed up substantially higher, about $10 higher in gold. And as you can see in silver, we are currently fixed at $33.53. Traders, we are looking at a daily chart, a daily candlestick chart of gold. You can see 1733 and change, 1733.80 is our current print on the board. And a news story which just came across Bloomberg approximately 1 hour ago, and that is, and I'm quoting, European governments move towards a second rescue package of Greece, calculating that the 130 billion euro cost of a fresh bailout is a price worth paying to prevent a default that could shatter the euro area. Now, in terms of a technical look at the market, which to me is what I believe is the easiest way to decipher this information, we still need to see the market break above this 1741. You can see that it has done that on one occasion here. It has faltered with it, though. Each time it has gone to this area, we saw it dipping below. Now, we're currently just a couple of dollars shy of that, and we'll want to see how the market reacts, and if in fact we can breach that area and move above it. In other words, can this market see 1741 as support as opposed to resistance? Now, traders, we're looking at a 720-minute Japanese average format. Each day represents two candles in the market. You can see that they have gone green again. It is still my current belief in terms of our count that we are in wave 4. That would be a minor wave 4. In our intermediate count would be 1. So I think that we have one final really nice rally, and that, as I've said, that rally should take us to anywhere between above 1800, 1802, of course, is our current top. This line here represents 1814, and then just below 1850. And I see these two areas as distinct possibilities of where we believe this market could go. Now, as I've said before, in terms of how I arrived at that number is quite simple. I simply looked at our benchmark wave, wave 1. I then, as you can see here, extended it, began here, and then all I am doing is doing what's called a Fibonacci extension, the top of this being 100%. In other words, if wave 5 equals wave 1, we're going to get a market that's roughly 1850, and that's where I would look for the market to go to, anywhere between, say, 1802 and 1850 prior to our corrective wave 2. Traders, we are currently looking at a daily chart. This is of spot silver, currently 33.55. As you can see, we are getting some active ticks, and the market does seem open as we go into the cash market overseas. What I am noting that I find interesting right now is the fact that what we were looking at in this marketplace itself, and we talked about this, was this rounded top, and my fear that this rounded top may lead to actually lower prices. But what we've actually seen over the last couple of trading days is the fact that this 33.36, this little target right in here, this looks like it's going to become support, and we should in fact see this market move higher off of this support level. What am I looking for? Well, my target still remains above $35. $35.35 is really the point in which I think the market could go, anywhere between $35.21 right in here and $35.35. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.